Hello, this is Brad Lee, the Options Oracle, and today I'm going to talk to you about PE ratios. Here's my webpage. It's theoptionsoracle.com. You can go here. I'm trying to put as much information there to be helpful for you as possible. But let's look at a symbol where this is in Yahoo Finance, and right down here on the right, where you got dividend and yield, 3.2%, much better than the bank. EPS is earnings per share, and PE ratio is 18.19. Everybody says this is a very important number, and it is. But there is no standard PE ratio. Every industry has its own average. So I'm going to show you how this works so you can, one way that you can price a stock. Now, this is only part of due diligence. This doesn't work all the time. So first we look at our graphs and we look at McDonald's and you say, hey, McDonald's is doing pretty good. So we scroll down here, and what's the industry? The industry is restaurants. Then I just use Google. Here's my Google search, average PE ratio per industry. I happen to choose this one's down here because it's an EDU, so they don't really have an axe to grind. And that brings me up. I should have this at the top. PE ratio per sector, and here's the industry name and the price and current earnings per share. This is the number we're wanting to look for. So we go down to restaurant, which is restaurant right here. PE ratio is normally 21.23. That's the industry average. Now, McDonald's is not an average stock. They're not an average restaurant. They're one of the big boys. Well, their PE ratio is 18.19, and their earnings per share is $5.39. Well, how can we use this to our advantage? Well, we pull up our calculator. Remember all that time you were in school learning algebra and stuff? Well, here's where it's going to pay off. So earnings per share is 5.39 times, and the average PE ratio for restaurants is 21.23 times 21.23 equals, McDonald's should be trading, it's worth $114. McDonald's is trading at 98, get away from there, 98.13. So at this point, I would say McDonald's is a buy. And that's it. Do your own due diligence, but this is one way that you can price a stock. This is Brad Lee, the Option Oracle, signing out.